Well, welcome to this afternoon's webinar. My name is Michael Clark, one of the financial advisors here at Raymond James. Just you're glad that you're here, and whether your friend sent you this link or maybe you're a client of ours, just know that glad you're here, and I'm going to try to provide some information that'll be helpful for you as we wrap up 2025. Pretty hard, or 2024. Pretty hard to believe we're ending 2024 and getting ready for 2025 already. I thought I would kind of go over where we are in the markets from a stock market perspective, bond market perspective, and international. So far, everything's looking like it's going to end the year pretty strong. US stock market is up about 29% there in the middle. We have the bond market up about 3.5% so far this year. And then international, think Nestle, Honda, Toyota, Taiwan Semiconductor, those types of companies, up about 8%. So as a whole, it's been a pretty good time to be an investor through, call it 11 and a half months. So if you have questions on that, or maybe you want to review your items before the end of the year, or maybe in early 2025, don't hesitate to reach out. Now, I want to talk a little bit about how to get ready for the new year. Some things you can do now, and really just some things to think about as you plan for next year. And I want to talk about really 5 different things. Limits tend to change every single year. And I'm going to go over a lot of the numbers to think about. Some of them will apply to you, some of them will not. So if you're in the accumulation phase of life, there'll be some numbers to put on your mind calendar. If you're in retirement, distribution phase, if you're on Social Security, if you're not, if you're on Medicare, group health, we'll go over some limits. But again, the whole point is not to become an expert on the limits. It's just to know that some of them are going to relate to you and to review those that you might need to get a little more information on. We'll talk a little bit about just investment scams and some things to think about, ways to protect yourself as you go into this new year. And then we'll talk a little bit about the things you can control and the things that you cannot control. Talk on this concept called rebalancing that you might want to think about. And then we'll round out our time together with a little bit on setting some goals for 2025. Now, when we look at limits, again, there's a lot of rules and I would say jargon in my world. And the limits, I would say, certainly fall into that. And I'm going to go through these rather quickly, just because some of them will apply to you, some of them won't, and I will hit just some of the highlights. And I know this is a very busy slide, but we'll review a couple of the key components of it. Now, if you're a saver, so if you're setting aside money for retirement, think you're trying to accumulate money, you're trying to grow your net worth, trying to grow your nest egg. There's a couple different ways to do that. Very popular way, 401k or 403b through your workplace retirement plan. Limits next year for 2025. If you're under the age of 50, you can put in up to 23,500. And what's interesting, starting January 1st, there's this new catch-up provision that applies to people 60 to 63. It's brand new this year. It's part of Secure Act 2.0, but there's a special catch-up that, again, is just launching in 2025, just for those 60 to 63-year-olds. It's an extra catch-up. If that applies to you and you want to chat through it, let me know. And then another very popular way of setting aside money is through an IRA. There's Roth IRAs, pre-tax IRAs, and the limit next year remains the same. So 7,000 if you're under the age of 50, 8,000 if you're over the age of 50. And then some things to think about in terms of limits. And again, some of these are very specific. If you're on Social Security, married, $44,000 is the income threshold to determine whether or not Social Security is taxable. Medicare premiums, So for those of you 65 and above, your Medicare premiums can also be based upon income. Now, a little bit higher than the Social Security limits. That limit this year for a married couple is 212,000, meaning if you make over 212,000 of income, you're going to pay a little bit more in health insurance, and that goes up pretty steadily as you increase your income. And then the standard deduction next year, nice, easy, friendly numbers. If you're single, it's $15,000. If you're married, it's $30,000. That's the amount of income that comes off your income before you file your taxes if you're taking the standard deduction. And again, I know there's a lot of terms and a lot of jargon in here. Some of these apply to you, some of these do not. We have a whole slew of people on here. Again, I know some of them apply and some of them don't. So if you want to have a conversation about any of these, feel free to talk to me. We can talk privately about your situation. Some other things to think about: if you're under 65 and have health insurance, just be careful of your income if you are on a subsidy. And then the gift limit for next year is $19,000 if that's of help to you. Again, I know that's a lot of numbers. They change every year. And so that's why I wanted to go through them. And just, again, some apply, some do not. If you want to chat through them, feel free to use me as a resource. One thing that we do a lot of training on is scams and how to protect people. And obviously, we're dealing with people's life savings. So there is a lot of training and a lot of technology behind the scenes to protect people. But it seems like you turn on the news, you go to Yahoo Finance, whatever. It seems like there's a new scam, a new way that the bad guys are out there trying to get you. And unfortunately, it is somewhat human nature. We're gravitated towards the easy investment, the easy way out. Here's an example of that. And some of you have used this or seen this before. I have used it. I used it 3 or 4 years ago in some of my presentations. But we have 4 different investments. We have A, B, C, and D. Most people look at A, say, oh, it's kind of a roller coaster ride, but you end up with a good amount of money. C goes up, down a little bit, but you actually end up lower. D seems kind of boring. Most people pick B, which makes sense. And as you've probably already guessed, based upon the title or the previous slide that we're talking about scams here, that's B would be Bernie Madoff. Bernie Madoff was one of the biggest Ponzi schemes. And actually that went right down to pretty much zero. And so we are attracted to those scams, those issues, just as human beings. I always say if it's too good to be true, it probably is. You've heard that from a whole bunch of different people. But unfortunately, with investing and when you get calls and see emails and things like that, unfortunately, if it is too good to be true, a lot of times it is. So just be careful with investment scams and be careful with online and the calls. In fact, a lot of them occur in the 65 and up community. Number one would be tech support scams. So, hey, this is Apple calling you, this is Microsoft calling you, this is Windows, whatever. That's the number one. That in 2023, there were over 17,000 of those. And you can kind of see some of the other types of scams. You look at the actual dollar amount lost. Investment scams resulted in 1.2 billion of lost money. Tech support scams, over $500 million. So you just need to be real diligent and real careful. And some tips on how to not be in those statistics. So number one, freeze your credit. If you have any questions on this or you want to talk through that, that'd be a really good conversation for us to have. Freezing your credit, you go to each one of the credit bureaus and you're, in essence, as the name suggests, you're locking up your credit so no one can view it. And the reason you would want to do this is if somebody tries to apply for a credit card, an auto loan, a mortgage, there's no way for them to look at your credit. So if a bad guy tries to go get a car loan in your name, well, it's going to result in, no, we can't review this person's credit. that Social Security number is frozen for looking at and reviewing credit, so that you can't open up anything new. Now, if you want to do it yourself, you can unfreeze your credit for a certain amount of time, apply for that credit card or whatever you're trying to do, and then refreeze it. It doesn't protect you against identity theft, but it is certainly something that is a nice safeguard. I've done it personally, and I would recommend you do it as well. Another tip might be on the obvious side, only use credit cards at gas stations. Don't use debit cards. There's a certain level of safety with credit cards that doesn't apply to debit cards. So again, if you're going to use a card at a gas station, make sure it is a credit card. And I normally recommend people close unused accounts. Talked to somebody just yesterday. They had a whole bunch of different accounts, a couple at a different credit union, one at a bank, a whole bunch of credit cards open up. And it's not that there's anything inherently bad with this, but they are ways for scam artists and predators to access your money and get into your accounts. So again, if you have, a tiny bit of money at Wells Fargo, a tiny bit of money over at this bank, you access this credit union, you have all these usernames and passwords, you have all this digital information out there that, again, if you have just a little bit amount of money in each one and there's really no purpose to these accounts, I would encourage you to clean that up just from an overall organization's standpoint, but it's less access you're giving the bad guys into your financial life. And then don't give out information that you're not expecting to give out over the phone. If somebody calls you, make sure you're expecting that call. And again, it's probably not so much for the people on this call. It's more maybe your parents, maybe older relatives. So we just need to be, careful with that, that information, because it certainly can be sensitive. And again, unfortunately, none of this is 100% certainty. There's no way that you can 100% protect yourself. But again, there are some tips in here that can protect you when it comes to being online and just overall cybersecurity in general. Going into 2025, another tip that I would tell you is to focus on the things that you can control. And there's a whole list of things that we can control, and there's a whole long list of things that we cannot control. And so when we look at planning for retirement, I'd encourage you to really focus on the things you have complete control over. So one of those would be spending versus saving. You can reposition how you have your investments. Do you use stocks? Do you use bonds? How much cash do you have? How are you spending your money in terms of, is it coming out of a tax-free account like a Roth? Is it coming out of a pre-tax account like a 401k or regular IRA? Are you using after-tax money? How does your actual tax strategy work? And is that working with Medicare, Social Security, some of those limits we talked about? All that stuff's in your complete control compared to, say, the blue there. Well, the stock market, we can't really control. Yes, we can reposition certain things, but at the end of the day, the stock market's going to do what the stock market's going to do. And then along the same lines, we can't control how people vote and how the laws change. We can only adapt to them. Again, we can't control what the tax rates are. We can just play within the rules. Again, we have things that are completely out of our control, and then we have things that are completely in our control. And I would highly encourage you to focus on the things you have total control over, especially when you're looking and planning for 2025. Something else you might want to consider, especially early on in the year, is this thing called rebalancing. Now, a lot of you might be in an account that already rebalances itself. It might already be being done for you. And then might be a handful of people that are saying, well, what is rebalancing? Well, rebalancing is when we reposition the assets to get back to the original allocation or what we were expecting in the beginning. Here's an example. Let's say we have two investments, A and C. We have an aggressive investment and a conservative investment. So to put it in different terms, we're 50% in stuff that's aggressive, and we have 50% of our money in items that are conservative. Obviously, a very oversimplified example here, but we're 50-50. Well, if just due to the market, maybe the investments, maybe we have a really nice market like we've had the past year or two, and we have our aggressive investments growing a lot faster than our conservative investments. Well, we might look at our portfolio and it might look like this because the aggressive investments have grown so much. Now, the reverse of this can be true as well. It's not always A beats C or anything like that. But in our example, we look at it and we're like, well, wait a minute. I thought I was 50-50, meaning I thought I had half my money in a conservative portfolio, and I thought I only had half of it in a risky portfolio. Now you're telling me I'm at 75-25? Well, rebalancing shaves off that 25%, puts it back to the C or conservative, and it repositions you back at 50-50. So that's what rebalancing does. It puts us back to the original allocation or the original what we thought. Hey, I thought I was 50-50, or I thought I had half and half. Again, you might be in investments that already reposition themselves or rebalance themselves. Very popular in retirement plans. If you're in a certain fund, a lot of times it rebalances internally. If it's something you want to chat through, maybe you don't know if it rebalances, feel free to let me know. I'm certainly glad to walk you through that. And then as we go into 2025, I'd encourage you to set some goals. Think about how you want to, spend your money, save your money, give your money. Again, everybody's a little bit different. Really depends on the stage in life. If you're in the, accumulation phase or the distribution phase, setting some goals can certainly be helpful. And obviously, on the financial side, we have savings goals, spending goals, giving goals. But don't forget, just in general, you can do goals for fitness. You can do educational goals. Maybe you want to set some goals for your family. For those of you working, maybe you have a career goal you want to do in 2025. You could set up a social goal, maybe some sort of spiritual goal. But again, here's a couple financial goals when it comes to saving. Maybe it's time to increase your savings rate. Maybe you've been meaning to increase what you've been contributing to a 401k, 403b, or maybe your IRAs. Maybe you want to do a little bit of Roth, or if you want to use me as a resource, maybe learn more about Roth. That can certainly be of help. On the spending side, maybe you have been dragging your feet and you haven't really looked at your budget in a while. That could certainly be a great goal, especially early on in 2025. And then for those of you charitably inclined, maybe you have a gifting goal, maybe a dollar amount, maybe a percentage amount that, again, you could set up for 2025. I know that was a lot of information, and I know we went through a good amount of nitty-gritty things, especially on the limit side of things. But if you have questions on what we talked about, I'm always here as a resource. I always love talking to people, whether you're a client, whether you're in one of our retirement plans, or maybe you just stumbled upon this online. Just know that I'm here as a resource. If you have questions on, the limits, protecting yourself online, any of the resources I showed on rebalancing, or really some of the control type items, feel free to let me know on that. We do have another workshop coming up. It's on Thursday, January 23rd, taking place at noon, also on Zoom. I'll have a lot more data about the market at that point, because obviously 2024 will be complete at that point. So I'll have, the stock market return, the bond market return. I'll have all that. And I'll have also some economic updates and outlooks at that point as well. So we'll go through that in January. So again, if you want to come to that, and then as I've mentioned several times, if you have any questions, you need anything, don't hesitate to reach out. Here's my contact information. Thanks a lot for joining us, and take care. Bye, everybody.